Let's begin, folks. Let's begin. Let us begin. If you can hear me, give me a cheer and we shall begin. Right? Let's try and make sense of the world, folks. Let's try and make sense of the world. Let's do it. So I should just check myself on LinkedIn. Sense of the world. Okay, that's good. What about LinkedIn? Yeah, this is good. So let me begin then. Good morning, audible, says Mr. Sumanth Kumar. Thank you, Mr. Kumar. Bum bum bum. Let's have the show that we deserve, right? Bum 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 bum. Bum 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 bum. Bum 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 bum. Bum bum bum. Bum 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 bum. Good morning, everybody. Welcome to Thinker's Frequency. We're having such a good time. This is the peak of human civilization. We're working so hard, doing such good work for ourselves, our parents, our kids, our siblings, our husbands, our wives, our friends, everybody. Well, not other people's husbands and wives, I hope. And just when we thought things couldn't get any better, like they couldn't possibly get any better, well, they just did. Call it divine intervention, folks, but things just got a whole lot better. Now we have Thinker's Frequency, our daily mental workout, our daily dose of insights and analysis which don't lead to paralysis right before we punch in. So let's continue with our journey of reading between the lines, things that are especially interesting and important in the world of business and finance. Let's go! But before we go, you gotta follow tradition. You know the tradition. You know the sweet and sacred tradition of the simultaneous sip. We'll all sip something together, it'll bring us good luck, as it always does, without fail, every day. And all you need for the simultaneous sip is a cup or mug, a glass, a tankard, chalice, or stein, a canteen jug, a flask, or a vessel of any kind. Pour it with your favorite liquid. I like some hot water with black pepper in it. And here we go. Nice. It's lovely. Let's do it again. Love it. Healing. You know what the simultaneous sip says, right? You know what it says? It says that you are not alone. It says that we are in this together. It's such a beautiful thing to say. With that out of the way, let's begin. So, let's begin with some geopolitics, as we discussed, or let's say international economics, if we can call it that, right? Because Mr. Sharma gave us a feedback that we should just put brackets on what we are discussing so it's easier to follow. Give it more structure. So let me try that today. China is to end rare earth controls probes against chip companies. So China has, in continuation with the conversation with US that it's having, it's basically ending the rare earth control and it's basically giving away rare earth minerals, right? So the push and pull that we talked about, China wanted to flex a muscle and it did. When it flexed a muscle, it essentially proved a point how the global economy is dependent on its rare earth mineral supply. US had to respond to that flexing of muscle. It had to offer, or let's say if it had to threaten China with more tariffs and so on and so forth. But nothing of that was a real threat to China. With the conversation, China effectively made a point that the world cannot function without its choke points. Let's call it them. Let's call them that, right? Choke points. And those choke points, it has chosen to essentially take them away from now, reduce the pressure. They're granting broad export licensing and rolling back curbs on key minerals since 2022. They were imposed since 2022. So that is basically China backpedaling on US and giving US an opportunity to just let it ride. Let it ride. Now this is essentially a very important step, right? Now, a lot of people might wonder why is China giving away the rare earth minerals which it had so strongly established as a very strategic entity? The answer is pretty clear. It was supposed to be a leverage. China wanted leverage and it always had leverage, but it wanted to show leverage and how it could be applied. Well, it has proven that. The entire India, US, Europe, everybody understood that the real threats that they were issuing to China, they might not hold much weight, right? So US essentially wanted China to buy some soybeans from them, reduce the rare earth play. So in return, US has come down with its tariff situation, and it's +1 China right now. Europe, by the way, Europe has not really cut in the deal as of now. So Europe also wanted to flex some muscles, establish some choke points, or let's say, you know, assert dominance. It has not been able to do as of now. Let's see how Europe responds to Chinese blockade of rare earth minerals and so on and so forth. Uh, in the meanwhile, India's rare earth mineral play is attracting foreign entities. The 7,300 crore incentive scheme that has been rolled out for, let's say, uh, what do you call it? Acceleration? You can't call it acceleration because for acceleration things need to exist. Nothing existed earlier, so let's call it initiation, right? The 7,300 crore initiation incentive scheme of rare earth minerals, magnets, and so on and so forth. Foreign companies are looking to step in that play. While that is happening, there is a lot of action as far as the Bank of England, uh, you know, move is considered. They were supposed to, a lot of people were looking at how Bank of England might reduce rates, but for now they'll hold the rate steady, right? UK economy is of course in the toilet, right? And there's a lot of problems happening. We discussed it. Viewers of Thinkers Frequency would remember how London, as which is the major hub of UK economy, was looking at a lot of job losses, especially in the services industry, right? And there were a lot of looming problems over UK economically. For now, Bank of England will hold the rates. What's to be seen is what happens in December. Mid December, it might happen because inflation is around 2%, right? So, if you look at the numbers, uh, the Monetary Policy Committee will keep the benchmark rate at 4% with UK inflation still running nearly twice the 2% target. So, inflation is still pretty high. So, if rates are reduced, inflation will go higher, right? So, they want to curb it, they want to make sure that no boats are rocked. So, that's what's going on with UK's Bank of England, of course. Uh, in the meanwhile, of course, whatever is happening with the US shutdown, the government shutdown, is causing problems. So the world economy is looking a little shaky as usual, right? We talked about how all all the indicators were pointing to some sort of over leveraged, over uh, complicated, uh, bubble kind of a situation. However, no such things are really panning out that way. So if you remember, Mr. Michael Burry, sorry, Dr. Michael Burry came out with the statement that there is a clear bubble, but I don't know what to do about it. That was the literal translation of what he said, right? However, uh, a lot of action is happening in the global economy, which might seem like you never know which way this goes. Like the whole AI play, we're gonna come to that. Let's finish with the whole international economics play. OPEC is looking at furthering the oil production. Oil production is getting the V8. The V8 is basically voluntary eight. It's Saudi Arabia, Russia, Iraq, UAE, Kuwait, Kazakhstan, Algeria, and Oman. These people are literally boosting production. However, the oil price is pretty stable. It has not come down despite the unanimous essentially rise in the oil production play. While that is happening, right, if you look at the Hindenburg, there's something called a Hindenburg indicator. Hindenburg indicator is essentially a cliff kind of a situation after which the economy is supposed to crash, right? That was up before 2000, that was up in 1966, that was up in 1929. But I don't believe in such graphs, right? This seems like astrology to me. However, that is on. Speaking of the global economic play, the numbers came out and they said as soon as uh, OpenAI's introduction or the LLM introduction, the open jobs in the US markets have basically decoupled from the S&P's growth curve. So S&P's growth curve is like a positive slope, and since an inflection point, the open jobs in the market are lower. Is that the impact of AI? Well, of course, or maybe not. Maybe there is inherent weakness in the market, in the economy, especially in the US economy, right? Speaking of US economy, most of what US is gaining, right, especially in the markets and in the economies because of AI and data centers. Now, this we are moving away from international economics to a bit of, let's say, things related to international economics, but still in the business domain. OpenAI had Mr. Sam Altman from OpenAI actually had an interview, right, with one of the investors, and Mr. Satya Nadella was a part of that conversation. It was a three-part conversation, right? And the interviewer asked that how can a company with $13 billion in revenue have $1.2 trillion in capex commitments, right? So that's the question he asked. How can a company with $13 billion in revenues have $1.2 trillion in buying commitment? To which Mr. Sam Altman literally flipped out, right? And he said that, hey, Brad, if you want to sell your shares, I'll be happy to put you in touch with somebody who would like to buy them, right? Because OpenAI's prospects are green, OpenAI's prospects are great, we are going to rise in revenues, right? The revenues are growing, they're not 13 billion anymore, they're growing and they will continue to grow, and we'll ramp up the capex accordingly, and so on. So he literally flipped out and he essentially attacked the interviewer for asking a question which essentially pointed out to the ludicrous capex announcements that the company has done. And he said that I'd love to see these short sellers or people who've been betting against OpenAI in the public market, right? And I'd like to see them short OpenAI stock, and I'd like to see them bleed, which is essentially OpenAI also going public. So he's talking about taking the company public and watching these short sellers burn. That's what he said. So he literally flipped out at that question, which pointed out to a lot of weird, dynamics on where this is going. If OpenAI goes public, right, at let's say $1 trillion valuation, because that it's essentially valued at 500 billion right now. If it goes public at $1 trillion valuation, it's gonna be a bubble of all bubbles. You're gonna forget Lenskart, right? Lenskart is a joke. Even if it valued, Lenskart was a tiny indication, or a Paytm was a tiny indication of some froth in the market. OpenAI will be the ultimate IPO of all times, and the most frothiest one of that, at that. So if you're looking at a $1 trillion public valuation, which is what whispers and murmurs are saying, it's gonna be very weird, because the company essentially is bleeding money right now, right? No matter what it has done, no matter the tool it has created, no matter what it has achieved as a technology, right? Well, there are debates about that, but you got to give it to them. It's very, very clear that it's clearly not a sure financial bet right now. But then, this had done a lot of PR damage to the company. And then interviewer came out saying that, hey, nothing like that has happened, it's cool, and so on and so forth. $200 billion in revenue, $200 billion in capex. They'll ramp down the capex if the revenue doesn't catches up. So it's cool, I'm still a buyer, and so on and so forth. Mr. Abhishek Sharma has a comment. This looks like insecurity on OpenAI's part. If Chinese AI companies expand globally, then OpenAI will definitely take a hit. And that's exactly what's, the reading of the situation. They say that China has essentially been able to successfully democratize AI revolution. So it showed with DeepSeek how it could shave off $1 trillion from the market cap of US tech companies. What's happening is that DeepSeek is very, very popular in China, and a lot of people are essentially using DeepSeek for their models. So what China is doing is it has made DeepSeek, it has democratized it, and it's using DeepSeek to essentially make hardware products and sell them, because its ability is making hardware products, right, at scale, and at a scale which essentially renders everybody non-competitive. So what China is essentially doing is using DeepSeek and democratizing DeepSeek to first of all hurt these foreign players, right? The open AIs of the world. It's gonna hurt them, and then it uses DeepSeek for hardware products like robots, like companions, like hardware companions, AI enabled hardware, and then sell it across the world and make actual money, right? That's what China is trying to do. It knows it can manufacture at scale and at a cost which is much much better than everybody else, right? They are doing really well, so they can use DeepSeek, and in the meanwhile, DeepSeek being open source essentially hurts everybody else. So it's a two-pronged strategy, hurting the software ecosystem by fully going open source, and then ruling the hardware ecosystem as it has always ruled. So that's what China's playbook looks like right now, and you know that is not good news for OpenAI. So if OpenAI gets valued at a $1 trillion valuation in the IPO markets, it's gonna screw everything up in ways that nobody can understand, right? Nobody can even imagine. There's a comment by Mr. Tushar Tiwari. I've seen Chinese models many times, they just beat US models. Companies do not use them as much because of negative PR of China. And the beauty is that while DeepSeek runs in a protected way in China, it doesn't have to be that way when you're transporting that model to yourself. So there's a lot of risks hanging on OpenAI, right? And that conversation essentially seemed very, very creepy. Extremely creepy. When he just said, hey man, if you're so bearish on OpenAI, right? If you're joining that bullshit parade, I'll just arrange the sellout of your stocks. Sell your stocks. Many people will be happy to buy them. And I was like, whoa, whoa. And it created sort of a furor on the internet, by the way. Right? So that's what's happening, in the business play, but with global ramifications. It's really heavy, whatever is happening, right? Nvidia, by the way, says that there might just be a lot of steam, actual steam, in the AI play, and Nvidia sincerely believes, or it hopes, that whatever investments are happening in AI, whatever growth AI is providing to the US economy and the markets, it sustains and it brings new reasons for cheer, right? This is exactly what we've been talking about in Thinker's Frequency for a very long time, that it's possible that AI essentially leads to products in the next year which sell so well that all the concerns of the bubble go away. All the concerns, right? Maybe all of them go away. And it actually turns out to be a big, big win for the technology paradigm. But will it be that? Nobody knows. Nobody knows for now. Nobody knows for now, folks. Let's move forward. So that was some international economics combined with geopolitics and stuff. Now let's come to India, right? Indian business atmosphere, very heavy. Whatever is happening in India is extremely interesting. If you note, the Tata Empire was looking at essentially, it had cancelled Mr. Mehli Mistri's board appointment. So a legal strife has begun. Mr. Mehli has stabbed charity commissioner over Tata Trust ouster. He says, according to some laws or Maharashtra Trust whatever rules, he's supposed to have a hearing. He's supposed to meet and consider all. So basically, it's a protocol fight right now. Now it's gonna be a protocol legal strife, right? So it's gonna be whenever something like this happens, the battle is not always on substance, but always becomes. Sometimes it always also becomes like a legal technical play, that protocols weren't followed. So it's just to draw it out, right? So let's say if you go to the court, right? You file a case on somebody, right? Let's say you file a case on a company for not paying. Okay. So what's the first response of the company? The company doesn't start coming into the legal nitty-gritties initially. What it says is, the first defense is always that this court is not supposed to be, this court is not the right court for this particular case. So the first is always to dismiss this as not worthy of this court. So let's say if you file a court in Delhi, right? The those people will say that this court is not the right place for this kind of a case. It should go to arbitration, or it should go to Mumbai, or it should go to someplace else, right? So that's always the play. And then after it, it always messes with the documentation, that these documents are not complete, or this document is not in that format, or these documents are not admissible, and so on. So it's always a protocol by protocol fight. After all the protocols are essentially fought with, right, that's when these companies are forced to deal with the legalese, the real legalese. So that's what's going to happen with the whole legal play. Mr. Tushar Tiwari says, I never thought Tata would turn this ugly. Mr. Abhishek Sharma says, time for lawyers to make money. Correct. Correcto mundo. Lawyers are going to make money in this, definitely. Right. I don't think, it's possible that Mr. Mehli Mistry is advised by his well-wishers and Tata Group to not rock the boat, right, and just accept it and move on. But it could be ugly for sure, right? Speaking of lawyers making money, folks, the business model of lawyers, which was essentially hourly billing, lawyers were billed by hours, right? With the advent of AI, that is changing. With the advent of AI, it's becoming more towards outcome-based service or something of that sort. It's not the hours that are going in, it's outcome project-oriented stuff. It's basically going towards the consulting play. How consulting has evolved, right? The hours thing, don't do it anymore for the consultants. So lawyers are essentially also shifting in that way. There's a lot of money that goes into lawyers. We're going to come to that. And that is essentially shifting with the whole AI paradigm, because a lot of reading of the materials, the finding of it, the swifting through the reports and so on and so forth, that is essentially being taken over by AI. Speaking of, this has nothing to do with AI, so I can't draw a segue here, but there is a US PE company, private equity, Tillman Player. They are in talks to pump up $6 billion into Vodafone Idea. So they want assurances by the government that the debt will be restructured, if not waived, because Vodafone is a dumpster fire. The only way Vodafone will be bought or will be used by any player, right, is if its debt is waived off, right? That's the only way Vodafone can survive. We've talked about that. Well, waiving all that debt is not so simple, right? It is definitely not as simple. So what it needs to be doing is like restructure it in a way that it essentially becomes inexistent, non-existent, right? So that's what's happening. $6 billion, that will make Tillman the promoter organization of Vodafone Idea. Essentially, these the Birlas and the Hutch people, the Vodafone people from UK, they'll step down from promoter place, right? So the company will invest only if government provides package covering telcos liabilities, may get promoter stakes, take control. Right now, government is the 48.99% stakeholder in Vodafone. Essentially, you and I are stakeholders in this mess, right? So that will stay. But the promoters essentially will switch. Basically, the Vodafone Idea trouble will be off the Birla's back. That's what it means, right? In interesting plays happening, Pepsi and Varun Beverages, the bottlers, they are looking at alcoholic drinks. Coca-Cola has tied up with Pernod Ricard, right? And Pepsi has been with InBev and so on and so forth, Pepsi Max or so on. So they are going to be looking at some low alcohol drinks to be marketed in the country. Their concern is that they have a lot of cash in hand. This is a cash in hand kind of a business. They need to expand, they need to grow that cash, otherwise it will be dead money, it will be sitting on their books, right? So they need places to deploy that cash, they don't know where to put it, and this seems to be an avenue, right? The alcohol play. Well, viewers of Thinkers Frequency know, we've talked about how alcohol play is fundamentally losing market, right? Essentially, at least in the volume terms, people are stepping away from alcohol, and that trend seems irreversible. So it's permanent. The trend, the decline of alcohol consumption, folks, it's a permanent trend. right? Across the world, even in India. Not many people understand that. Not many people agree with that, but data, it's just a pure numbers game, right? Alcohol consumption is going down 100%, right? In that, it sort of seems surprising that a company like Pepsi would be interested in that. Why say it's permanent, says Mr. Tushar Tiwari? Because uh, it is okay, that's a good question. Why do you say it's permanent? It says it's permanent because the user preferences have shifted in an irreversible fashion. So why it is being called permanent is because the graph is essentially, it's not an inflection point and it could switch from that inflection point. It's not looking like that. What it's seeming like is a consistent drawdown in the consumption pattern. I hope that answers your question. Yeah, that's. I hope that is the answer to your question, Mr. Tiwari. It's a consistent drawdown which has been sustained, through time in the last 4 years or something of that sort. So it is. It looks permanent, and that's what's happening. And you can't expect it to change. You can't expect people to start drinking all of a sudden because alcohol is not something new that has been right. So it's not gonna be like. The world will itself open up to alcohol once again. It looks unlikely. So while you are right to push back on the permanent part, because we never know what happens tomorrow, I'll take that. The decline essentially seems consistent. Let's not say permanent. Thank you for that. Well said, well caught. Uh, so moving on, folks. Colgate, by the way, the India's chief player in the toothpaste business, right? 16,000 crore market is not seeing any growth, and that is a problem. While people like Patanjali, people like Dabur have seen growth. Dabur has grown like 16%. It has 16% of share right now, right? Colgate has about half the market, but it's not being able to grow. So for a long time, Colgate essentially had reasonable growth, right? But not anymore, and it's a cause for concern. So it's looking at what it can do in order to essentially taper off, because if it doesn't grow, it doesn't grow, right? So that's a bit of a problem, and that's Colgate's situation right now. Why do you think Colgate's isn't growing? So what they are pointing out is that the rural demand is okay, but the urban demand is essentially not growing, or it's declining. Now, this is often something we say, is it the market or is it the company? Is it the company's problem or is it the market's problem in general? I think it's the company's problem, right? It has essentially saturated itself in that play, and there's nothing more to do in that market for now, right? And that is why newer products, maybe if they brought out new product mixes, or they acquired a company, or they came out with some sort of innovations and stuff like that, they could see some new shoots of growth. But for now, business as usual has little room to grow, right? That's what it's showing. By the way, speaking of nationally relevant industries, so this is the bracket. This is what the bracket has been. We discussed international economics, finance, a bit of geopolitical play, and then we moved to India. So we are talking about India right now, right? Indigenous drone design, foreign test 30,000 order. So India has like MALE defense order, right? That is long range drones. So what is the full form of MALE? Medium altitude long endurance drones, right? So India needs about 87 of them, and it's a 37,000 crore project. So armed forces are looking to procure this, and for this they are willing to consider foreign players if the Indian players do not serve the purpose, right? India may miss out on the indigenous design and developed long range drones needed by armed forces, with foreign companies lining up to make offers for a 30,000 crore offer, right? So several companies, the procurement is open only to Indian companies, with idea being to unlock UAV manufacturing. However, several foreign firms have rushed to sign agreements with Indian companies to offer their products for the requirements. So it might happen that directly or indirectly, especially indirectly, it could lead to foreign people take. India is really lagging behind in the drone manufacturing play. And this 30,000 crore scheme is awesome, but it's a very small step in the list of things that India needs to do to spur drone revolution. We need to do a lot, right? Right now, this is going to go with that L1, L2 play. 64-36, that is the split, right? 36,000. Final order of 30,000 crores will be split between lowest two bidders. This is the usual government contracts. This is how government contracts are awarded in general, right? So there's something called an L1, there's something called an L2. So the lowest bidder is L1. It gets a large part of the business, right? 64 in this case. And the L2, the second lowest bidder, it has to agree to the job in the lowest bidder's price, at the lowest bidder's price, and it gets a smaller share. So it gets a price that it didn't want and the volume that is lesser. So that's how government contracts are placed out, and that's exactly what's going to happen here. So let's see what happens. The defense play is also going to be looking at a visit from the representative from Israel, right? Foreign Minister, Mr. Saar, is going to come in. Well, we don't discuss politics. A lot of dumb shit is getting thrown at the political world. In the political, it's just very, very embarrassing whatever happens in the political space. So we don't talk about that. Let's move on, folks. So just give me a second. We've already talked about the lawyer play. So a number, if you were interested, is during FY25, 500 companies, the Nifty 500 companies, spent over 62,000 crores in legal expenses, right? So 62,000 crores. It generated, so that's exactly. And AI Bit generated a revenue of $29.5 million, and it's going to go up to $60 million by 2030. So that's essentially the legal play. Nifty 50, 62,000 crores in a fiscal year. That's the legal play, folks. Moving on. India's exports to US have dipped 37% during May to September period. Of course, that was expected with the tariff situation. A lot of sectors across the board have suffered. So if you want to know some numbers, right? Exports of solar panel dropped 60% from 200 million to 80 million. Gem and jewelry, 33% decline. Machinery, agri and machinery, 33% decline from 4.8 to 3.2 billion dollars. Right? Aluminium exports 37%, auto parts 12%, iron and so on and so forth. Right? Pharma 15.7%. India's exports overall dipped 37% to US. Well, that was expected, but still the PMI, the IIP, they are positive. It means that the country is able to find either alternate markets or some domestic consumption is offsetting some of the losses, right? Then there is some offshoring. Whatever is happening, the losses, while evident, are not catastrophic, right? So that's what's happening in the play. Moving on, folks. This Economic Times Startup Awards, which has happened. So a lot of speeches by Mr. Peeyush Goyal and a lot of people. When we talk of 1 lakh crore government support, when you supplement that with private sector, there is a multiplication factor of 7 to 8x there. So that's what the government is saying, that we are supporting startups and entrepreneurships, and so on and so forth. So a lot of talk there. Good people have spoken. Mr. Peeyush Bansal is saying that going public is just a step in the way, and so on and so forth. So whatever happens to the Lenskart play, I have often stated my prediction that if the Lenskart market cap falls, and it will fall definitely sometime or the other, it will lead to an overall dampening of the sentiment in the IPO play, right? Right now, primary market is huge. Primary market is growing. FPIs are also kicking in the primary play, not as much in the secondary play, right? All of that might just come to a grinding halt if there's just one big bad news. All you need is just one big bad news, and it slows down for a while. It's not going to be a crash, and it's not going to take years to recover, but for many months, the whole mood might just be spoiled. Some people might be forced to, let's say, cancel their IPO, delay it, and so on and so forth. A lot of people have to do that, right? It's the market, it's not them. So that might happen, and Lenskart will be the one to blame, right, for juicing it out. Moving on, folks. Speaking of the markets, people are saying that November might just have, growth in eyes for the market. If you remember, Motilal Oswal had, this is a report by Motilal Oswal, that out of 5 times in the last year's November was a positive month. They had come out with a similar report for September, where they said September is a bad month, right? Because out of the last 10 years, almost all 10 of them had September going down, right? But September changed in India. You know why? GST rationalization led to September going up. So I certainly don't believe these patterns, right? That this pattern happens, so this will happen. This scandal was like this Hindenburg, a tortoise essentially looked at a marble and it, tuck its tongue out. That happened 5 years earlier, so this will happen. I don't believe in this shit, right? But essentially, history says that the November market goes up. So let's see what happens there, right? But I am a firm believer of not reading these charts and stuff like that. They seem like very, very weird to me, right? Situations are very different. Moving on. We've talked about FPI's play. Vedanta's Limited is well positioned to benefit from the commodity cycle. Vedanta Group, the VRL play, Mr. Anil Agrawal, had a lot of debt overhang. It got Viceroy's short call, right? Just like Hindenburg had shorted Adani, Viceroy had shorted Vedanta. But Hindenburg essentially had an actual impact on Adani. Viceroy not so much. Nothing happened to the Vedanta Group. And now the commodity cycle seems to be favorable, especially in the aluminium play. Moving on. Steel companies seek more steps to curb imports, right? That's okay. Indian Hotels EIH ITC join race to buy JW Marriott Bangalore. JW Marriott Bangalore was going to get acquired. We talked about it's coming out of the insolvency bankruptcy play, right? 13 to 1400 crore worth property. And of course, most good players are fighting for it. So Marriott, ITC, and so on and so forth, they're looking at buying the company. Speaking of private equity deals, folks, AIMS. AIMS is the Asian Institute of Medical Sciences. The promoter, the founder, is looking at buying back the private equity play, 49% stake. So he's raising debt and all to essentially get his company's stake back from the private equity players who had invested in it a few years prior, right? AIMS is estimated to be valued at 1,000 to 1,200 crore, right? Now this is essentially a pretty solid, this is a good pattern, right? A founder buying back private equity in the hospital play makes all the sense in the world, because Indian hospitals are really looking at going green, right? There's a lot of room to grow for the Indian hospital chains. There's a lot of room to grow, and then there's also a lot of room to grow as far as pricing is considered. So even the profitability profile can improve. We saw a lot of deals. We saw Sahyadri hospitals. There's so many deals, it's hard to count. And even the existing hospitals are engaging in a lot of M&A and expansion and so on and so forth. We talked about Fortis. We talked about Apollo, the Apollo demerger and so on and so forth. Now this is another step in that direction. So if you look at BII and Omnibet attempted to sell their holdings to other private, but it did not get traction because of the valuation was high. So the company is looking at 25 to 30 price to earnings, which seems to be okay. It seems to be fair, right? Yeah. Moving on. We've talked about that. Delhi's bad air is a concern, of course, right? Delhi looks like a gas chamber right now. Bad air, brain fog, eye burns. Bad. It's just bad. It's leaving a bad taste in the mouth. That's how bad it is, right? And in this bad air, marathon running is happening. Now, there should be a study, right? Apparently, it's not clear enough to people that marathon running in this air is not a good idea. Whenever somebody comes out with bullshit studies, I say they could have just saved some money on it and given me money instead. But people are actually running marathons in this air, right? Which is hilarious. It's a tragic comedy. It's just crazy, right? Literally, India Gate has disappeared. India Gate has disappeared. So there is a joke on Delhi, right? That what does a Delhiite say during winters? What does a Delhiite say during winters? He says, "तू जानता है मेरा बाप कहाँ है?" So it's obviously people who are not familiar with Delhi. Delhi is known to say, "तू जानता है मेरा बाप कौन है?" Right? That's the Delhi play. "तू जानता है मेरा बाप कौन है?" So in winters it changes. It becomes, "तू जानता है मेरा बाप कहाँ है?" And the person says, "नहीं, तू जानता है मेरा बाप कहाँ है?" Because nobody can essentially see, right? The smog is so unbearable. So that's what's happening, and that's very very weird. Uh, and especially marathons in that place extremely hilarious. However, realty companies are essentially coming from Mumbai and Bangalore and going into Delhi for rising demand and prices. So despite Delhi being so bad when it comes to 6 months, right? So right from October, the most beautiful 6 months, by the way: September, October, November, December, January, February. Take out September, take out February, maybe half of it. October, November, December, January. October, November, December, January. These are the 4 months, like 1/3. It's unlivable because of air. Yet, realty companies are stepping in from other markets and into Delhi because of rising demand, apparently. So, 50 to 60,000 units launched yearly here, valued at over 1 lakh crore. Luxury units, key growth driver, of course. Now, isn't this weird? Despite poor conditions due to pollution and rainfall, why are property prices still high? Exactly. Now, this is, Mr. Sharma, a very big question. What would it take to puncture the real estate market of Delhi, essentially? Of Delhi. I'm just focusing on Delhi, right? How is Delhi's NCR still in demand despite Delhi having bad monsoons, right? In monsoons, the city has starting to flood. It's a shithole, literally, right? In winters, people can't breathe. In summers, people can't live because it's 50 degrees, right? It's hotter. It's so hot. So it's very hot during, let's say, March, April, May, June, July. So April, May, June, it's extremely hot. August, the rains. July, August, the rains began. September, October, November, December, January, February. These are supposed to be good months, but they are unlivable because of pollution. Despite all of this, how is real estate still kicking in? This is beyond me, to be honest. I understand the city's network effects. So I read a book called Scale, right? And in that book, it's a book about how things scale, about how cities scale. It said a city never dies, right? If you make a city, it's just immortal. A city never dies. Even if it falls, it doesn't die. So that's what is probably working in Delhi's favor. The city is not dying. It's choking. It's coughing, but it's not dying. And it's beyond me how real estate hasn't really cracked. Because you know what you expect when these inconveniences start to happen? You expect the elites to go out of the city. That's what you expect, right? The ultra elites, the super rich, they should go out of the city, right? And when they go out of the city, the whole ultra premium luxury housing place should collapse, right? If it collapses, there is no housing market in the affordable play anyway, right? That is in the toilet, right? So whatever is heating up the Delhi's real estate play is the luxury, ultra premium kind of a play. And these people should go out, right? But they don't. So maybe it's long-term optimism on the city, despite this problem having been having existed for like 10 years now. It started in 2011, so it's 15 years. 15 years this has been going on. Even then, maybe the elites, maybe the rich, maybe everybody thinks that this problem will get solved sooner or later. And when it gets solved, the city is a city, right? Delhi is Delhi. Maybe it's the long term optimism which is not making people puncture the real estate market. And, you know, also if it gets punctured, because India is such a heavily densely populated country, maybe what you're gonna see is just people from outside rushing in to buy real estate at cheap, right? So it's not gonna actually have any effect, because no matter what kind of a shithole the city is, right? Unfortunately, despite being so beautiful in so many ways, a lot of people will step in because there's inherent long-term optimism that this problem will get solved, right? So, by the way, Maharashtra moves to make redevelopment projects more viable. We've talked about this. Redevelopment projects are a very important part in the Maharashtra real estate story, right? Because especially in Mumbai, there's very little room to essentially make new projects, right? But redevelopment gives real estate companies a shot in the arm that, okay, if you make it easier, the regulations go down, the pricing and everything, that leaves a lot of room, right? Proposal including extending fungible and FSI benefits to rehabilitation areas. Free fungible area will be calculated on rehab entitlement, not existing built up area. Tenants' rehab area gets fungible, not just buildings' old area. Tenants get better sized units, developer get more saleable area, helps push redevelopment. So it's talking about fungible, extending the fungible play, right? Moving on, folks. INSCO is paying 1,800 crores to its creditors to buy Hindustan Natural Buy, the glass play. Moving on, folks. Ministry says we are looking to deepen private sector R&D in emerging tech. India doesn't spend a lot of money into R&D, right? It needs a lot of private participation. That's what's happening. By the way, bad news. Is it a bad news? You tell me. Demand for work under Manrega seen highest in Tamil Nadu during October. Is it bad news for Tamil Nadu? Now, this is a very deep contrast because Tamil Nadu is getting a lot of action of foreign investments in manufacturing units, if you know, right? A lot of action, but still the rural economy seems to be in a bit of a trouble there, and then also UP, because the Mahatma Gandhi scheme is a proxy of how active rural employment situation is. If the rural employment situation is very green, the Manrega scheme, it won't take a lot of people, right? People take Manrega when there's nothing else available, there's nothing better available. So if Tamil Nadu is seeing the highest work under Manregas in October, it means that the rural economy in Tamil Nadu is seeing a bit of a stress, right? That's what's happening. By the way, I had something important to say in that regard. You see, we talk about capex and domestic consumption play, right? A lot of people doubted whether Ford will essentially exit the country, and we had a very deep discussion on Ford. I have a dog in the fight, right? Because we have a Ford car and we love it. Why did Ford choose to revive its plants in India? Right? Can you guess why? Because the car industry, which was essentially looking like it's in the toilet, right? It revived because of the GST rationalization play. And that is exactly what we were hoping for, right? Domestic consumption leading to private capex leading to more jobs, leading to more domestic consumption, and so on and so on and so on. So this is very, very good, whatever has happened. We've talked about companies keen on India because of the 7,300 crore scheme. Moving on, a lot of trade going on. So these people are trying to do a study where they're asking whether it's long walks in one stretch that are going to be more useful, or long walks split that are going to help. So would it be long walks together at once that are going to be more beneficial, and then you sit for 8 hours, or you split those long walks across your day? What do you think is gonna? They're actually doing a study for it. I think they could save some money, right? They could just ask me, and I'd say split the walks, right? Split the walks. because extended duration hurt. Resting periods of extended duration, sitting periods of extended duration, those are the enemies, right? But they just don't, they're not coming to me, folks. Why don't they watch Thinker's Frequency, right? They could have just watched Thinker's Frequency and like, okay, no research necessary. We've heard from Nishant Mittal and he says what he says, right? But unfortunately, I'm not getting that money, which makes me very sad, right? I could have used like $500,000 for that research. They would have come to me. I was like, I'll make a PPT for you folks. I'll make a PPT, right? Just give me the money. Show me the money. Show me the money. Show me the money. That's Jerry Maguire movie reference, of course. Speaking of Chennai, we talked about Tamil Nadu. US chip fab equipment maker KLA in talks for a 3,000 crore investment in Chennai. R&D proposed Tamil Nadu R&D center will be part of the fab equipment maker's global R&D footprint. This is exactly what I was talking about. Tamil Nadu is getting a lot of such investments. There's a lot of network effects happening in Tamil Nadu related to manufacturing, right? So KLA, another one in the fray, which is awesome, right? So snapshot of global operations present in 18 regions, $10.5 billion in revenue, employs around 15,000 people, spent $1.3 billion in 2024 in R&D. And now some of that money is going to come to India, which is beautiful, Speaking of what is beautiful, the Pradhan Mantri Venture Capital Amir Kalyan Yojana is on. So the Amir Kalyan Yojana is a VC funded play, right? Whenever companies raise money from VCs, they start handing out free stuff, reducing expenses, and Amirs actually get helped. So I call it Pradhan Mantri Venture Capital Amir Kalyan Yojana. So Zepto is axing surge fee, handling fee post recent funding boost, right? So the platform is positioning itself as the lowest price platform and it raised money. So all that money is going to give you some free chocolates, free ice creams, and so on and so forth. As soon as Swiggy also raises money, it's going to give you something for free, right? So all you can hope for is that these companies keep raising money and then they can keep delivering things for free without costs. Unfortunately, at the small businesses' expense, right? Because these are the people that are going to lose. They are going to go out of business. But the companies will, till the time they are having fun, they're having fun. Small businesses are going to get hurt like never before, unfortunately. Amazon has tweaked seller rates, up storage fee as festival sales ends. So Amazon had reduced India's fee by a lot, right? Now some of that is going to rationalize. Maybe they realize that, this particular bit needs to be thought through. And so storage fee essentially is going up and so on and so forth. Moving on. ISRO's Bahubali rocket places India's heaviest satellite in orbit. Space agency eyeing multiple launches in FY26, says ISRO chairman. ISRO is obviously doing very, very well. But whatever advantages ISRO gave in the world of satellite launches, right? They've been far eclipsed by what Starlink has been able to do, right? SpaceX, I mean. What they've been able to achieve as far as bringing the cost down due to the reusable rocket paradigm, that has changed the way how rockets work and operate, right? So earlier, the limiting factor with a rocket was that you had to dispose it. So it was such an expensive play, right? That you launched it and then it got burnt and then it just gotten thrown away, right? So that was the paradigm. But then came Mr. Musk and he came with the idea of having a rocket and then making it come down and you pick it up and then you reuse it. So his goal is it's just a price play, right? That you can have so many launches and so many relaunches, right? It's just basically, he gave an analogy just for, after explaining the fundamental, after explaining the first principle, he gave an analogy. Just imagine if a car it couldn't be refueled, right? So that's how he looks at rockets. And that has taken a lot of shine away from ISRO's efforts because ISRO really launched rockets at much, much cheaper cost than the rest of the world. But with the new technological paradigm, they'll have to find a new way to make themselves relevant, right? So maybe if ISRO also figures out reusable rockets, right, and then the India's PPP advantage bringing the cost down, it'll again be a leader in its own right. But for now, it is essentially not looking that great. Not looking that great, right? You know about Nexperia's China case. So Nexperia was a Chinese company, right? And the Dutch player essentially nationalized that company. So when they nationalized that company, the Chinese operations essentially stopped the supply of a particular product which is used in the automotive play. Very small product, a small chip, right? A low-end chip, but which is used in automotive play. When that happened, all the automotive industry went in a jiffy. That's how much that's how much power China holds. So today, Nexperia China dismisses Dutch parent scopes. Dutch chipmaker Nexperia's China unit said it had established sufficient inventories of finished goods and that its supply chain remained secure and stable after its parent halted wafer supply. The Dutch company suspended supply of wafer to its Chinese assembly plant, calling it a direct consequence of local management's failure to comply with agreed contractual terms. So it's a very, very big case. The whole Nexperia battle is on, and let's see what happens there, right? For now, it's China 1 and world 0, right? It's China world 1-0. And with that, we come to the end of the 161st episode of Thinkers Frequency, folks. Our daily mental workout, our daily dose of insights and analysis, which don't lead to paralysis, right? Before we punch in, we had a quick episode, right? Mr. Abhishek Sharma's advice on putting things in brackets made the show a little more organized and thus a little more efficient time-wise. I put them all in a bracket, right? And then when we move forward, it took less time. So we are going to end the episode in like 55 minutes or so, which is awesome. Right? So it's 9:13. Our daily mental workout, our daily dose of insights and analysis which don't lead to paralysis comes to an end. It's 9:13 a.m. We're going to punch in anytime soon, right? I wish you a beautiful day personally and professionally, and I'll see you tomorrow, same place, same time, hopefully. I should thank my patrons, first of all of them, right? I have named my patrons now in the description of the episode, so that's cool. Patrons, please share, of course, make it grow, help it grow. We are always also going to come out with shorts now. The team is working on it. We also are doing labeling. It takes a day for YouTube to generate those subtitles, but now we have all the labels coming in, so you'll have regular labels on all episodes. That's awesome. And then also shorts, so that's awesome too, right? We're gonna go very well. More patrons should join so that we don't have to keep doing the fundraising call time and again. I should thank Mr. Sumanth Kumar, Mr. Abhishek Sharma, Mr. Tushar Tiwari, and everybody else who joined. Not many comments today, but it was lovely talking. Please take care. Bye-bye. Mr. Abhishek Sharma says, thanks for your time. Have a great day, everyone. Thank you, Mr. Abhishek Sharma.